Hey, this is June, your friendly neighborhood mortgage broker. There are so many myths that I need to debunk right now about the guarantor loans. The number one myth that everybody has is I can't sell my home when I've gone guarantor. Not true at all. You can still sell your home and it doesn't affect your borrowing capacity as a guarantor. Now, what does that mean? It means that if, let's say, that you've got a property worth $1 million, you had no mortgage on it, and now you've taken about a $200,000 mortgage that's secured against your home for your kids or for your siblings. That does not affect your borrowing capacity. So that loan is not yours. That loan is someone else's. It's just sitting there against your property. It does affect your equity position. So it means that in the traditional sense, if you're able to lend up to 80% of the home value, in this case, up to $800,000 of a $1 million property, you just can't access about $200,000 of it. So you still have a usable $600,000 of equity available to use if you want to go and buy a second property or do something else with your funds. And if you sell the property midway, again, still completely fine. You've sold your property, $200,000 of it will go into a savings account that we just can't touch. You still earn all of the interest on the savings. And if you then want to use that to buy another property, it just transfers to the next property. So it doesn't limit you from being able to sell your home either. The number two myth that a lot of guarantors have is, what if I already have a loan on my property? That means I can't go guarantor. I need to have no loan. Not true. Again, it's just about the equity. So for example, if your property is worth $1 million and you've got, let's say, $500,000 owing against that home, you might think, I can't go guarantor. Not true. Depending on the valuation, depending on which bank we go to, we'll still have room to move to take that second mortgage, so it just sits behind your $500,000 mortgage, second mortgage to still be able to help out your family as a guarantor. Alongside that, a lot of guarantors think, what if I'm not working at the moment? What if I am just on a pension? I'm not wanting to go back to work. Is the banks going to still accept me as a guarantor? Yes, they are. The banks, depending on which one we go to, don't care if you're still working or if you're still on the pension. So you don't have to be working. You don't have to be self-funded through your super. There are still banks, a lot of them, that will still take you on as a guarantor. Please do reach out if you are a guarantor and you're a little bit confused about the process, and we'll let you know how it all works. The third big myth that I need to debunk right now is that a lot of people, guarantors and applicants included, think, cool, now we're locked in with this guarantee for the next 30 years or until they sell their home. No, the guarantee is only there for as long as it needs to be. Meaning, let's say that you've gone guarantor for, let's say, your child, they've bought an $800,000 property and they've borrowed $800,000. When their property has gone up in value and their loan has come down, and let's say that at some point in time that their house is now worth $1 million and their loan is now worth less than 800 combined, at that point, it's just a form to sign and we take that mortgage away from your property so you don't have to be guarantor anymore. 3 months is the absolute record that we've managed to discharge guarantors away. And that's pretty good. Usually it takes about 2 to 3 years, but here at MAD, we've had literally less than a year, multiple times. That's because we work with the right lenders that value the property in the right way to be able to discharge yourself as a guarantor as soon as possible. Now, what if me as a guarantor, I don't want to put my property up as security. I've already paid it off. I don't want to go and get another mortgage against my property, whether or not it's in my name. But I might have some shares or some savings and things lying around that I could potentially want to use. Some banks will even take a guarantee on savings, on cash, not just property. And so, for instance, if your kids need $200,000 of guarantee and you've got $200,000 that's just sitting in a savings account, you're not really probably wanting to use it for the next couple of years, the bank can take a security on that as well. We just can't touch it and withdraw from it until that guarantee is done. But you still get all of the interest on that too. And so you don't have to put your property up as security. It can be cash as well. So again, you're not even spending that cash. That cash is there where you can see it. You just can't touch it until the guarantee is gone. But you're still getting the interest. You're still keeping all of the cash there, and it's still helping out whoever you need to help out within the family. One other myth that I hear all the time is that because we're using a guarantor, our application fee is going to be higher or the interest rate's going to be higher. No, not at all. Because the bank is still taking security over that everything above 80%, potentially 20% plus fees on someone else's property instead of cash. In the bank's eyes, you're getting an 80% loan. So they're still going to give you exactly the same rates and fees as if you had a 20% cash deposit. Thanks for joining us, guys. If you do want to leave a comment, I promise we'll get to it and we'll answer every single question that you might have. If you want to book in for a meeting and just see what you can do in your personal situation and circumstance, please just give us an email, give us a buzz, get in contact with the team, and we'll be able to help you out to fulfill your version of financial freedom. That's it for us, the Friendly Neighborhood Mortgage Brokers.